Hi, thank you for listening to Rivers Investment Channel. I'm Chi Yao. Today, we will continue with the topic fake news, fake markets. The Fed has finally raised the interest rate, even though by merely another 25 basis points. The Fed notes the improved economic condition and vows to raise three times next year. The great achievement is according to the Fed's perspective for three rate hikes next year. The Fed has finally accomplished one out of four rate hikes they promised the same time last year. The bond market has lost $2 trillion. Market participants can still make up the loss from commodity and equity market, but if the interest rate continues to rise, it will turn the market upside down because the cost of credit will be too high that it will jeopardize the credit market. At the same time, all financial securities are priced with interest rate as one of the key components. The irrational behaviors in equity market, based on the false premises of the brightened economic condition, are going to fall apart. Even with the three rate hikes, the interest rate still can't be justified by the risk of default and inflation. The debt is growing at more than 3.5 times the economy, referring not only the economic activities are based on debts, but also the interest payments are paid through refinancing. We are reaching the stage of these economies of scale. There is no way we can ever pay back interest payments honestly, let alone the principal payments. However, the elites are either too stupid to realize the economy couldn't afford too many or further rate hikes, or they are purposely walking us toward a total collapse. The financial system still seems to believe the soundness of the collateral. As the interest rate dials the reality back in, the price of collateral will crash, and the crash will turn the assets into liabilities. When credit bubble bursts, it will cause super deflation. The only way to stop the process is to lock down the system and print to oblivion. And they will print so much currency that eventually the collapsed confidence in currency will resurrect the hyperinflation back to life. There is no real demand but speculation, and we can see it from the declining home ownership to the 6 decades low. The rise in cash dollar index in 20 metro areas indicates the real estate market has reached another peak. The establishments are so proud of the result of currency printing and wealth transferring. With tax credits, leverage, and term length, real estate market is financialized. Every home flippers want to sell at a higher price, but none of them want to be the last one to catch the ball. Hedge funds, banks, and speculators, each one of them is passing the ball to the next, hoping the price will forever go up. They take the real estate off the market, hoping to get past the burst of mortgage crisis happened during the Great Recession, delaying foreclosures from the banks, bidding real estate from hedge funds, and flipping houses from speculators. The real estate bubble is blown bigger than ever. When the price surpasses the peak level, which it has, they can then pass the ball to extract the profits. Banks are willing to participate in the ball passing because they can charge interest fees. However, the price pressure is built to fall, as gravity is the law of the nature. This game must pull in more and more currency for the real estate market to continue going up. There is a limit for confidence boundary. The rising rates will break the confidence either on lenders or borrowers. When collaterals turn sour, expect no payments. The flood of underwater real estate will bring back the reality. The reality being the wealth was never created in the first place. The real estate is a cost. Now, with the financialization, it is now a very big cost. Without pulling in currency, a man can hardly ever build enough wealth to start a real goods producing business. Even if he can, the profits are transferred from the business to the financial markets as currency gets created. And the worst, the working class can't afford a place called home. To wrap it up, when costs of credits can't be compensated by price inflation, the financialization game will end. Embrace the free market and start money. Thank you for listening to Rivers Investment Channel. This is Xiao signing out for now.